What's up everybody, Steve here. I was in the process of recording a video pertaining to a couple articles that I've been reading regarding unpaid rent that's piling up and landlords are not going to be able to hold on. And I came across a section in the article that made me research further about delinquent real estate taxes, which it is building up based on some of the proof that I got here. So in this article, it said landlords are struggling to afford property taxes, which fund critical local services, including fire departments and schools. So as I was reading that, I'm like, man, I should probably, real estate taxes, homeowners insurance, mortgages, they're obviously all kind of working together in terms of making payments. And if you're not making payment on your mortgage, then you're probably not making payment on the escrow for your real estate taxes and your insurances. So then it's up to the servicer, if you guys are in forbearance maybe, it's up to the servicer to continue payment on those real estate taxes and insurances. Now, I recommend, if you guys are in a forbearance situation, that you guys do call your lenders and make sure that you guys do have confirmation that those are still being paid, both real estate taxes and insurances. In most cases, the banks want to protect the asset, so they're going to go ahead and most likely pay those even if you guys are delinquent, but it is something you guys might want to check into. But let's take a look at this. The single largest source of tax collections is related to the taxes from real estate, and that's prevalent probably in most counties, in most cities, in most states across the United States. It's the largest revenue that they're getting from taxes, and it's pertaining to real estate taxes. The second thing is most governments don't have significant reserves. So what happens if they don't have the money coming in, then they're not able to supply the necessary funds for schools, fire departments, infrastructure, and so forth. So what happens is they actually do tax sales, which we're going to get into, and I'm going to give you an example of our local county here in Southwest Florida. So they'll actually sell the tax certificates, and basically it's going to be a lien against the property, and individuals or corporations can buy these tax certificates and actually get interest on their money. So it's a very interesting concept. It's a very interesting way to actually get interest on your money. And as high as in the state of Florida, in Lee County, it's high as 18% in terms of what you could actually realize for interest on your money if you buy certain tax certificates. And obviously it ranges, and it goes to public auction as well. And obviously if you guys are interested in tax certificates, you probably want to reach out to the local professionals in your area, reach out to the county and city or state that you guys are in, and call the appropriate professionals in those areas if you're interested in investing in tax certificates. The next thing too is, ever since COVID happened, the Fed Reserve had what's called the Municipal Liquidity Facility, and that accounted for $500 billion that's going to short-term notes for states and counties. Now, there is certain regulations. There has to be a minimum population for certain states and certain counties to get these funds, and basically they're short-term notes from the Federal Reserve to basically assist offsetting the delinquent real estate taxes, which are so necessary to keep everything moving along. But I've been talking a lot about forbearance and the real estate market and the potential real estate crash that could potentially happen. I really haven't even thought about the amount of delinquencies for real estate taxes, so it's interesting. But check this out. So if you guys don't know, taxes are paid in arrears. So basically you're paying for your real estate taxes for the previous year. So right now in the state of Florida, you have until March 31st to pay your real estate taxes for 2020. So we're in 2021 right now. You have until March 31st, 2021 to pay your real estate taxes for 2020. Now, if you don't pay your taxes, that's when it can go into a tax sale. And what I want to do is I want to show you on the board Lee County and a specific example of the trend of where delinquencies are going. So let's take a look. So let's start in 2017. 2017 There's $40 million of real estate taxes advertised. Okay, so that means that $40 million worth of taxes, real estate taxes, were delinquent. So they advertised this on the public website where you can buy these tax certificates. And out of the $40 million, $28 million of taxes were purchased from investors who are going to get, as I previously mentioned, interest on their money. Now that accounted for 28,000 parcels. So parcels could be vacant land, it could be commercial real estate, it could be improved residential real estate. So that was 2017, and basically I just want to see where the trends are going. And obviously I believe that they're going up in delinquency. So let's check out 2018. 2018 and 2017, very comparable, as you can see. 40 million to 41 million, slight increase. Basically the same amount that actually sold at auction, and pretty close to the same amount of units that it accounted for. If we go to 2019, this is where we definitely see a jump. Okay, now these are actually closed sales, so 50 million as opposed to 41 million increase, and 28 million an increase to 33 million from 2018 to 2019. So hang on a second. Let's see what kind of increase that is. What is that? That's 5 divided by 28. That's a 17% increase right there for that's a 17% increase from 2018 to 2019 in terms of delinquent real estate taxes that were sold at auction, which is very interesting because obviously COVID and everything else, that was pre-COVID. So, and then we get into 2020. Now, right now, again, as previously mentioned, we have until March 31st to pay the real estate taxes. And as of now, the delinquencies is around 60 million. Okay? So they're projected, based on the information I pulled up from the Lee County website, they're projected about 40 million. So if that does happen, if they go and advertise $60 million worth, so basically right now we are March 10th, another 21 days, everybody has the opportunity to get their taxes. They're not going to assume any penalties, nothing like that. But right now it's roughly about $60 million delinquent. And if their projected is 40 million, you're talking, if $40 million does sell in terms of delinquent real estate taxes, what's that, 7 divided by 33? That's a 21% increase. And that'll account for 31,000 parcels. Now, these numbers seem pretty big, and I called the girl earlier to ask what the total tax revenue from real estate is, and she claims it's about $1 billion. Well, let me ask you, do you know how much tax revenue on an annual basis Lee County gets from real estate taxes?
I do believe it was about like $1 billion or so, I think.
$1 billion?
Yeah.
Okay. So, all things considered, and I don't know if that's just pertaining to real estate taxes or what. I probably have to do a little bit more research on that. But this is a significant increase. If that does pan out, we went from 17% from 2018 to 2019, and then another 21%. But if we took the number from 2018, and if it does project to sell 40 million from 2018 to 2020, we got, 12 divided by 28. That'd be a 42% increase from 2018 to 2020 in terms of real estate delinquencies. So I'm just bringing this to your attention. I encourage you guys, actually, comment below, check your own county website and see where the real estate delinquencies are. I bet it is trending north in terms of increasing of delinquencies, delinquent real estate taxes. So I want you guys to comment below. Let me know the trends, maybe where you're at in 2018, 2019, 2020. Pulled up If you're in a larger county, most likely all this information can be gathered online. And anyway, check out that other video that I'll post as well, in terms of landlords pretty much getting stuck with the bag and not you know, most of them are going to start throwing their hands up. Unfortunately, I think we're going to see a lot more properties come to market from small mom and pop landlords, because they are just sick and tired. A lot of them have invested their life savings into a retirement fund, a retirement plan, and that plan consisted of maybe 2 or 3 or 5 just small properties that they rely on that income from tenants paying. And with the moratorium for evictions, a lot of these small mom and pop investors are really hurting. So I think that we're going to see an influx of inventory hit the market from that class of people as well, the investor class, and time will tell. Anyway, if you guys got any value out of this, I appreciate a big thumbs up, and I'll see you guys on the next one. Thanks a lot.